Alright, for this video I want to go through a sample form 941, which is an employer's quarterly federal payroll tax return. And in this example we're going to look at a 941 filing for an S corporation where the sole shareholder is the only employee. So the 941 could be filed for a lot of different kinds of businesses that have payroll, but in this example we want to look at a scenario where we have a 100% owner of an S corporation. He's the only employee, so how does he do his 941s? Now we've got one slide here covering some background on the 941 and the fact pattern. We've got the 941 for the first quarter of 2024, and then I've got one Excel workbook here showing how we're calculating his compensation for each month, the quarter, and then the yearly totals, and on all the taxes that need to come out of those paychecks. So if we start with the one slide here covering some of the background, this 941 is a quarterly federal return. So it's filed by employers to report wages, payroll taxes, and any kind of federal income tax withholding that's being deducted from those salaries. Now, the 941, it's a quarterly return, so you're effectively filing it 4 times during the year, and its due date is 1 month after the close of each quarter. So, for example, the first quarter payroll ending March 31st, 2024, that 941 is going to be due on or before April 30th of 2024. Now, really important here, once a business starts filing these returns, you really should keep filing even during a quarter where you might not have any payroll. And that's because the IRS just needs to see the consistent filings. If there's a gap in the filings, they often send you a letter asking why you didn't file the return. And so you're just better off filing zeros just to make sure that it's in the system and you don't get these kind of automated notifications. Now, what's unique about this single shareholder S corporation payroll? So if you're a shareholder and you own greater than 2% of that company and you actively run the business or participate in it in any capacity, you should be paid what's called reasonable compensation. So you have to be on the payroll, pay yourself a reasonable salary, and then that's also subject to withholding taxes, payroll taxes, and the like. Now, what's also unique about these S corporations is if the S corporation is paying for your health insurance premiums, which it's allowed to do, the health insurance premiums need to be added to the shareholder-employee wages. Now, the premiums are not going to be subject to the payroll taxes, but they are included in your wages for purposes of determining how much federal income tax withholding applies to your salary. Now, once it's included in your wages, it's ultimately zeroed out again because the shareholder can claim the self-employed health insurance deduction on their 1040. I won't cover that whole, all those mechanics in this video. I've got some other videos covering S Corp shareholder health insurance, so I'll put those links below. Now, in addition to the 941, what other kind of filings might you need? Well, the Form 940 is the federal unemployment tax return. So this FUTA return is just an annual return. It's generally filed in January following the close of the tax year. And there's some special rules on how often you have to make the deposits if your payroll is large enough. In this case, it won't apply to us. The quarterly returns for state payroll, those might also apply. So depending on where your business is located, where your employees are based, you might have to file state payroll returns as well. Now in this example, we have a Florida employee in a Florida company. So we don't have any Florida state income taxes, but Florida does have state unemployment returns. So the SUTA returns have to be applied for and paid as well. Now let's look at our fact pattern here, and then we'll have a look at that Excel workbook. So we have John Q. Taxpayer. He's the 100% owner of this S corporation, and he actively participates in the business. He estimates that the net profit for the S corp is going to be $50K, and so his health insurance premiums that the S corporation is paying are $389.26 a month. So that's $4,671.12 in the year. Now, based on this net profit, he's going to pay himself what he considers to be a reasonable salary of $1,000 a month, right? So $12,000 for the year. and he's going to adjust at the end of the year for any kind of bonus. So he might pay himself more if the entity is more profitable, right? Reasonable compensation for S corporations can be quite complicated, but in this example, we're just going to assume this is reasonable and then treat it as such. So $1,000 a month, and then he's got to add the $389.26 per month for the health insurance premiums. Now, John prepares and files this 941 on April 20th, 2024. That's when he pays the tax as well. And he also needs to be filing the Florida UCT 6 for the state unemployment taxes as well, but we won't cover that in this video. All right, so let's have a look at the Excel workbook here. What we've done is separated this into the monthly wage computation, how much is going to apply for the quarter, and then a kind of a yearly annual check figure. So if we look at the compensation, we could see his base compensation here. Remember, he wants to pay himself $1,000 a month, and he's including the shareholder health insurance premium of $389.26. So his gross wages per month, which this is ultimately going to end up in box 1 of his W-2, is $1,389.26 for the month. There's the quarterly figure, and there's the yearly amount that would be reported on his W-2. And so we see here we have the projected kind of values that are going to apply if this payroll remains the same, right? So if he adjusts these later on in the year or issues him that bonus check, then obviously these figures would update. Now, the withholding taxes. So these are the payroll taxes and federal income tax withheld from John's paycheck. So the Social Security tax, 6.2%, applies on the compensation that is not the shareholder health insurance, right? So 1,000 times 6.2% is $62, right? And then the same applies for the quarterly and the yearly factors. Now, the Medicare withholding tax is 1.45% of the 1,000. So remember, we're not taking it on the total gross wages because the shareholder health insurance isn't subject to those payroll tax. So we've got the 6.2% of 1,000, 1.45 of 1,000, and then the federal income tax withholding that he's taking out of each paycheck is going to be $19. So $19 per month is coming out as federal withholding tax. Now, how do you get this figure? You can use the IRS publication for payroll tax withholding. So if you do manual payroll, and depending on the pay period, you're going to look up the monthly factor and then figure out how much needs to come out for each month. Now, if you do a biweekly payroll or a weekly payroll, those amounts are going to change, and obviously the amount of compensation as that goes up and down is going to change as well. All right, so we've got those figures there. So he's going to have $95.50 in taxes taking out of each month. And then the other deduction here, he's including the health insurance as income, but it's also being effectively taken out of his paycheck because the S corporation is the one paying it. So $389.26 per month as well. And so his net paycheck here is going to be $904.5 per month. And so if we think about the math here, he's got $1,000 in compensation that's coming to him, but he's got to have the $95.5 in taxes taken out. So the net paycheck is going to be the difference there, and that's $904.5. So then we have the quarterly balances there, right? We're just taking 3 months for each, and then the yearly is going to be 12 months for each factor. All right, so John's effectively getting that $12,000 compensation, and he's going to take home $10,854 at the end of the year, assuming all these values remain the same. Now, this up here is just the employee portion of the tax. But when we file the payroll tax return, we're reporting the employer share as well. And so that's this reconciliation down here. So what we've done is we've got the employee Social Security, employee Medicare. So those are those two values there. And then the employer pays the same rate, right? The same 6.2% and the 1.45%. So we calculate those two amounts as well. And then the federal income tax is withheld from the payroll for the employee is that monthly value as well. So the total taxes that need to be submitted with the 941 are $172 per month or $516 per quarter. So these are the taxes, just for clarification here, these are the taxes that are coming out of John's paycheck, but this is all of the taxes that are coming out of his paycheck plus the taxes that the employer has to pay. So when we have our quarterly figures here, we can then transfer these amounts over to our 941. So let's have a look at the 941. We've got the quarterly return. Make sure you're using the correct tax year, right? So we're in the 2024 year for John. So we've got the EIN for the company at the top here. Check the box for which quarter this is applying. So we're doing this for January, February, March of 2024. Company name, address, and then we move on to part 1 with the financial information. So when we look at part 1, we've got line 1, number of employees who received wages, tips, or other comp for this pay period. Well, in our case, we've only got 1, right? We've got just John. So box 1 is just 1 employee. Box 2 are these gross amounts of wages, tips, and other compensation. So box 1 is going to include the all of that's going to be included in his federal income. And so that's the figure that we see here, gross wages, Form W-2 box 1 for the quarter. So $4,167.78. So we report that figure there. And then the federal income tax withheld from wages. This is the federal income tax, not the payroll tax. So the federal income tax that we're withholding from his wages are the $57 for the quarter. So we enter $57 on line 3. Now, lines 5A through 5D is where we report those total wages that are subject to FICA, right? The Social Security and these Medicare taxes. So column 1, where we report the wages that are subject to these taxes. So 5A, taxable Social Security wages, we have $3,000. So it's $3,000 because remember, we're not including the shareholder health insurance as subject to Social Security or Medicare. It's just the base compensation there. So $3,000 for both taxable Social Security, taxable Medicare, and multiply by the 12.4%. So that's the 6.2 for both the employee and the employer. So we got 6.2, so $372 in total Social Security tax. And there's the 2.9%, right, which is 1.45 times 2 of $87. And so we add up on line 5E the Social Security tax, the Medicare tax, and we're left with $459 of total taxes. Now on line 6, we're adding the $57 of federal withholding, the $459 of Social Security and Medicare, and we're left with total taxes before any adjustments of $516. Now, line 7, adjustments for fractions of cents. If you have rounding errors with the payroll taxes withheld on the employees' paychecks, then you can enter rounding adjustments up or down to get an adjusted total tax number. In this case, the math was very simple. We don't have any kind of rounding errors, so it's just an even $516. So the total taxes after adjustments here, we have $516. We don't have any kind of unique credits that are being applied. We're not taking any payroll tax credits. We're increasing research activities. We don't have any adjustments for sick pay or group life, right? So this is very straightforward, basic 941 for this S Corporation shareholder return. All right. So at the end of the day here, the balance owed is $516. So if you did make any deposits during the quarter, then you can list those deposits, those payroll tax deposits here. Now, for small payrolls like this, if the balance due is under $2,500, you generally don't have to make any kind of payroll tax deposit. So in this case, John's payroll tax liability, $516. And if we just check really quickly here, that reconciles with our total per our worksheet, right? $516. So the $516, he can pay this online. He can send this return in with a check. He has a lot more options because the amount is lower. So on page 2, enter the company name, the EIN at the top again. And then in part 2, you check one of these boxes depending on your company profile. In our case here, line 12 is less than $2,500. Or the prior quarter amount was less than $2,500 and we didn't have the next day deposit. So we've checked this first box here in item 16. So we're not a monthly scheduled depositor. We're not a semi-weekly depositor. And then we move on to Part 3. Now, Part 3, we're leaving blank because we have not stopped paying wages, right? We're just getting started. And we're not a seasonal employee or seasonal employer, sorry. Now, in Part 4, you can enter a third-party designee. So John's just entered his information again, even though he is the CEO and signer, just to make it clear that he is an authorized individual to speak with the IRS. A lot of times, a tax preparer might be entered here as a third-party designee, or if you've got a larger payroll and you have, let's say head of accounting, might be an employee that can act as that third-party designee. Now, in Part 5, the return must be signed, dated, and then sent in to the IRS. Now, these returns can be filed electronically. So if you have software and you can file these electronically, that's highly recommended. It's a little more efficient than paper filing returns. But in this example, we have a paper filed example. Okay, so once all of those items are entered, then we can look at the payment voucher. So because this is under the $2,500 figure, John can make this payment with a check and a voucher, or make the payment online, right? We always recommend doing it online because it's just certainly much more efficient. But if you have to make a payment using these methods, then you can use that voucher as well. All right. And very important, read the payment voucher instructions. Make sure that you're reporting everything correctly on the check and including the voucher. You certainly don't want this money to get lost. You want to get credit for the payroll taxes that you're actually paying. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next video. Thank you.